Hello and welcome to the most serious crypto news of the past day. Bitcoin has made a breakout after all, and the price is currently at $71,500, and it's likely to go even higher because a boiling kettle pattern has formed on the chart, and steam, as you know, always goes up. Well, if you doubt my technical analysis, let's look at Ethereum. The pattern of joyful capybara has worked for 100%, and the price has exceeded 2,000. Take it, haters! And now let's get to the yesterday's news. Iranian crypto asset outflows surge 700% following airstrikes. Well, new day, new evidence that crypto has really become a digital heaven, only now from the other side of the barricades. While traders on hyperliquid were hedging the risks with oil and gold, the Iranians decided to save their capital in a more direct way. According to the analytical company Elliptic, in the first minutes after the start of joint military operation of the United States and Israel, the outflow of cryptocurrencies from the largest Iranian exchange, Nobitak, jumped by 700%. So in a panic, people were withdrawing assets from the exchanges to wallets, realizing that tomorrow it might be too late. Nobitex, by the way, is an interesting market. In 2025, 7.2 billion passed through it, and the user base is 11 million accounts. And yeah, it is closely associated with the Islamic Revolutionary Guard Corps. Through it, Iranians convert depreciating reals into digital currencies and send them to external wallets, bypassing the global banking system, which is close to them by sanctions. Elliptic experts have noticed that similar spikes have occurred before, for example, on January 9 after mass demonstrations and internet outage, as well as after an announcement of a new US sanctions. So the crypt in Iran performs exactly the function for which it is loved and hated. It allows capital to flow through the fingers of the state and the sanction networks. However, there is a caveat. The blockchain is transparent, and the same data that shows a surge in outflows helps intelligence agencies track exactly where the money went. Fake VCs target crypto talent in new click fix campaign. Moonlark Lab analysts have uncovered a large-scale attack in which hackers disguise themselves as venture investors and prey on developers and crypto experts directly on LinkedIn. And the scheme is simple. Fake crypto funds are created with beautiful websites, portfolios, and even photos of top managers, generated by neural networks, of course. And then they write to the specialists, praise his project, and offer to urgently discuss investments. The victim is invited to a video call, and a link is sent to a fake Zoom or Google Meet, and there is a robot check via Cloudflare. The person clicks, and at the moment, the malicious code is copied to the clipboard. Then the instructions appear. Open the terminal and insert this to confirm that you're not a robot. And people imagine that. They do it. And the code quickly takes root in the system, and everything is under control of the computer. There were also cases with a fake Zoom client for Mac that simply stole passwords and sent them to Telegram. An expert actually suspects that North Korean hackers UNC 1069 group are behind the attack, but I don't know. As always, if you like my content, don't forget to like up this video and subscribe to the channel. This way you won't miss the next news yourself and will help my channel grow. Data centers in space, less crazy than you might think. The Economist magazine predicted that with the launch of Starship in March, the era of space data centers will begin. And you know what? There is a logic to this, actually. There is nowhere left to build on Earth. From 30 to 50% of new capacities are postponed due to permits, local residents, and lack of electricity. And in space, on the other hand, there is no solar energy, no neighbors, and no one to protest and complain. So, StarCloud has already launched a refrigerator-sized satellite with NVIDIA H100 chip and even trained NanoGPT on Shakespeare's work. And although Shakespeare in orbit is fun, and there are nuances, of course, so far building a space data center is 3 to 5 times more expensive than building a ground-based one. The main problem is the delivery of cargo to the orbit. Currently, the price is from $1,500 to $3,400 per kilogram. And the cooling of services in vacuum, that's a question. In general, if Starship succeeds and reduces the costs of launches to like $100 or $200 per kilogram, and engineers resolve the issues with radiators, then space data centers may become cheaper than terrestrial ones, you know? Elon Musk, by the way, recently merged SpaceX and XAI and applied to create an orbital data center of 1 million satellites. And that means that soon all neural networks will literally hover over our heads. Scam token case against Uniswap dismissed by U.S. District Judge in NYC. The Federal Court of the Southern District of New York has finally turned on common sense and closed the class action lawsuit against Uniswap and its founder Hayden Adams. The plaintiffs, who lost money on fraudulent projects like pump and dump schemes, exit scam, and other joys of life, tried to prove that decentralized exchange was to blame for providing the platform to the bad guys. And Judge Catherine Polk-Fila replied beautifully. Providing a working platform does not make developers complicit in fraud, and blaming the creators of the code for the actions of third parties is absurd. In fact, the court confirmed the truism. If you bought a scheme token that you advertised on the internet, then the claims should be against those who issued and advertised it, and not against the protocol on which it all worked. Uniswap Labs general counsel has already called the decision a precedent for the entire DeFi sector. This means that open source developers now have an ironclad argument. We just gave you a tool, and how to use it is your business. Against the background of this victory and the overall growth of the market, the native Uni token increased by 2.1% to $3.88. A small but a proud green candle in honor of the triumph of justice. Bank of Japan to test blockchain-based reserve settlement, Governor Ueda. The Bank of Japan has officially launched a blockchain sandbox for testing internal transfers. The head of the regulator, Kazuo Ueda, personally confirmed, yes, we are now experimenting with the distributor registries to understand how it will basically work with their national BOSHnet system. They are mainly testing interbank transfers and security settlements. However, Ueda immediately made a statement. These are purely technical tests, do not expect any changes in monetary policy. But the fact is that the Japanese have entered the blockchain sandbox. At the same time, the head of the central bank would not be Japanese if he had not warned about the dangers. He separately stressed that smart contracts are a dangerous thing. Errors in the code can threaten the stability of the entire financial system, so they are testing carefully and with caution. And all this is happening against the background of a global restructuring of crypto regulation in Japan. They are already discussing equating cryptocurrencies with securities, and last year they even released the first stablecoin tied to yen. So perhaps soon Japanese banks will transfer yens to each other through the blockchain. Bitcoin miner Core Scientific to sell bulk of Bitcoin holdings in 2026 to fund AI pivot. Well, the final news of the day is that the miners are selling again, but this time under the sauce of the great migration to AI. Core Scientific, which was absorbed by the AI giant CoreWeave for $9 billion last year, decided that it no longer needs bitcoins, and it will put up for sale all its 2,537 bitcoins, and that's about $170 million at current exchange rate. The money will be used to increase liquidity and finance a new AI strategy. It's funny that the average purchase price of these coins was $101,639, and now the Bitcoin is hanging around $66,000. And that is if they sell it, and when they sell it. To put it mildly, it's not going to be in a plus. But apparently, hopes for a bright AI future are more important than short-term losses. And by the way, Core Scientific is not alone in this. Riot Platforms also reported record annual revenue and also an emphasis on AI. They even messed up a partnership with AMD, and according to the rumors, they are already in the black. An activist investor, Starboard Value, generally estimated their turnaround in AI at $21 billion, and they demand to accelerate. Even Mara Holdings, despite losses of $1.7 billion, also announced the change of focus on artificial intelligence. And that's all interesting, and we'll see what's gonna happen. But that's all the news for today, and I will see you tomorrow. Bye.